So now to get into the world of business, where it's a reprieve for salaried Kenyans, as the National Treasury is assuring that there will be no tax increases to the imposed to fund this year's proposed 4.2 trillion shillings budget. National Treasury Cabinet Secretary John Mbadi says that payslip deductions that were effected for the Social Health Insurance Fund and the National Housing Levy have led to a more structured system.
Treasury was out to address issues affecting Kenya's economic policies, reporting that there are no further tax increases on employment income planned because the economy is stabilizing.
At the end of 2024, ladies and gentlemen, through the tax laws amendments, the government systematically set in place measures to ease off the burden on the payslip.
It's something we continue to see. In fact, this year we have just started very well, and we have seen KRA perform well in terms of meeting its targets. And right now, the macroeconomic environment is stable.
So when we focus on lowering the cost of living, the question we ask ourselves then, what is it then? What are the interventions? What are the activities and programs that we need to have so that we can lower the cost of living?
According to the Treasury, an individual earning 100,000 shillings previously contributed 2,750 shillings to Social Health Insurance Fund. But under the new system, this has decreased to approximately 1,925 shillings, after accounting for the former NHIF contribution of 1,700 shillings. The net additional deduction is now 225 shillings.
Contribution to housing levy, contribution to SHA are now allowable for tax purposes. So you don't double tax those amounts. You are saving basically what you are contributing before to those two institutions is saving you at least about 30% for those who are earning salaries of about 38,000 and above.
Mbadi says that the interventions were not final, adding that more measures will be put in place to cushion Kenyans. The 2025-2026 finance bill is currently undergoing public participation.
What is not a must is to have a finance bill with increased rates of taxation. So no one says that that finance bill must always have increase in our taxes. It can have a decrease, it can remain the same, but we will have to produce a finance bill.
Alan Auko, Prime Edition.